When they run a business like that, they're too busy just keeping it going and they don't dig into the numbers. And what happens when you don't do that is there's what I call rotten eggs. There's certain products that you're selling that are actually hidden in there and they're not actually very profitable products that you should be selling. And when you look at it by product level, you start seeing those trends like, this product I'm selling, the ad cost is high. So this is actually dragging down your profit margins. I see entrepreneurs stay up to 2, 3 a.m. every night killing it because they want to make sure their business grow. And you're doing all that and still giving away part of your profit, not worth it, right? So that's what we try to protect for them. We try to protect making sure that whatever case possible, we stay in, of course, all the legal way of doing it and try to minimize their tax bill to make sure they get back every penny they deserve.
This podcast is brought to you by Bambassadors.com, the go-to platform for e-commerce brands to create video reviews that boost social proof and sales on TikTok and beyond. Get your first video review created and posted by a genuine creator, completely free, no strings attached, and no credit card required at Bambassadors.com.
Welcome to the EcomXFactor podcast, where it's all about launching and scaling your business using sales funnels, automations, and smart marketing. And now, please welcome your host, the founder of EcomXFactor, Yaron Bin.
Hi, Alan. How are you?
Hey, Yaron. How are you doing?
I'm doing great. Very excited for our conversation. As I told you before we hopped on the call, so tax optimization and bookkeeping and accounting has been a topic that I've been frustrated about in the last 3 or 4 years. So I'm looking forward to our conversation.
Yeah. I think definitely it can be frustrating, right? Because especially when it kind of lasting on entrepreneurs' minds, right? They have so much other things to worry about. And then they're like, oh, now I have to think about tax and accounting. But I guess that's what we're here for, right? We're trying to tell them how important it is, how much money they can save if they pay attention to it. And hopefully through this podcast, they realize that they do need to look out for a little bit, right? Before they start growing their business out of control and start getting all these letters from the IRS and other governments, like asking them for tax bills and tax money.
Yes, exactly. So a lot of time when you go to the, at least in my experience, when I went to the accountant, so we said, listen, we're going to take care of everything. You just need to grow your business. And it's such a slogan. It sounds amazing, but it never turned out this way. But I assume in your case, it's different. So what of majority of the customer, when they come to you, what is their situation with regards to, are they on top of their numbers?
Oh, I would say that was definitely the opposite, Ron. I mean, most of the time it's what, like, I ask them for their, what bookkeeping they have or what tax solution they have. And most of the time it's just, I just look at my Shopify dashboard or, I just wrote it down on a piece of paper or on Excel. It's here, it's there. Not a lot of organization. A lot of time we see it, right? And that's very typical. And we say like, that's fine because, just to give you a little background, like, so me and my partner Stanford, before we started Free Cashflow Agency, we actually were Shopify entrepreneurs ourselves. We started doing the drop shipping model, right? And we realized when we got into it, like how much work it is being like solo entrepreneurs. You're kind of doing customer service by yourself. You're the website optimization guy. You're the guy like negotiating in the middle of the night with like Chinese suppliers on Skype, right? Like even we as CPAs didn't have time to worry about counting a tax. And we're like, how could these other business owners have time to do that? So we realized like, when these guys couldn't do it and we can't do it, like, but then they're leaving so much money on the table, right? When they don't do that, right? And they're not looking out for their future profitability when they don't know the numbers very well, right? And that's why we found that this is actually really neat because a lot of these business owners don't really do that upfront. So that's really the reason, the drive why we started Free Cashflow. And we only serve this niche of audience. We only serve online business owners. We only serve e-commerce owners, right? And we try to niche down and only focus our attention on helping them. And it has been great because these guys were telling us like, yeah, we've been looking for this because the typical accountant they go to, and maybe that's why you're so frustrated, Ron, they don't understand online business, right? They ask them, what is dropshipping? What is ROAS? What do you mean? What are these terms, right? The accountant gets very confused because they don't get to deal with it. Because, online business, e-commerce is very of a, I would say, millennial way of doing business, right? It's very also really heavily fueled by the COVID pandemic that went on, right? A lot of people turned to online business. So a lot of the old school accountants don't understand this model of business. And when they don't understand, there's twofold of problem. One, you get frustrated because the communication is not there. And two, you possibly leave a lot of money on the table because they don't understand what deductions apply to you, what credits apply to you, right? And that's what we kind of like the little solution we're trying to fulfill here for a lot of these clients of ours.
It's amazing. So when clients come to you, how does the onboarding normally look like? So first of all, you probably plug them into like a software, or then you start doing the thing like the past reports. Afterwards, you start giving advice, optimization. Can you walk us through the onboarding process?
Yeah, so we try to make it as smooth as possible. And even before that, Ron, what we do is when we get on like a discovery call with a client, right? We ask them to sign NDA. And the reason for that is, of course, for good protection of financial data they're going to share with us. But then we ask them even on a discovery call to start sharing some of their financial data with us, right? Either as like previous tax returns, bank statement. And the reason we do that is we provide a free diagnostic audit of their current situation, right? We try to break down what are the kind of the gaps they have in their business. And we perform the kind of like diagnostic audit video and we send it to them. We're saying, these are the things we found in your business. These are the things you can improve on. And these are the things that, free cash flow can come in and provide value for. So then we know upfront before they even sign with us, is this going to be a good deal for us signing with these guys, right? So then before they even do it, they're confident in that when they sign with this guy, I already know A, B, C, these are the things they're going to provide me with. So when we onboard, it's very smooth. They already know what we're going to start doing for them right off the bat, right in the first 30, 60 days. And you're right, the onboarding is like that. We get even more detail of all their financial data over. We plug it into, normally it's either QuickBooks Online with Xero as the two best accounting software we have found. And from that point, we start doing in-depth analysis of their information, and we meet with them on a monthly basis, kind of like on a Zoom call like this, and we break down the numbers for them, right? Either on a monthly bookkeeping, tax recommendation for them, and then even on further, some of our more developed clients are looking into, cash flow forecast and valuation for their business. Mm-hmm. They want to know beforehand, before they go to someone to sell their business, how much their business is worth, right? They don't want to go get a bad number, right? A bad multiple, because there's certain things they may be able to do as far as improving your margins, right? Which was what we can tell them to do. Saying, hey, your margin doesn't look too good. That's why you're not going to get this kind of big dream selling number, right? And that's what we can help them improve on before they go out there, find themselves a broker to buy their business. Mm-hmm. So a lot of pieces like that, we can help them. It's really about what stages they're at in their business.
Normally, what tactical or adjustments that you make that have like a really big impact and very, very common?
It depends on the business, but we have seen what businesses that have grown to say the 7-figure mark, what they kind of sometimes not realize or fail to do is they don't really dig deep into their product mix, right? When they run a business like that, they're too busy just keeping it going and they don't dig into the numbers. And what happens when you don't do that is there's what I call rotten eggs. There's certain products that you're selling that are actually hidden in there, and they're not actually very profitable products that you should be selling, right? And when you look at it by product level, you start seeing those trends. Like, this product I'm selling, the ad cost is high, so this is actually dragging down your profit margins. While there's these 5 winners, these absolute winners that's actually propelling your business forward, and these are the 5 things that you actually should be focusing all your ad dollars on. Right. Mm-hmm. But we're not realizing that you may be selling these 15 items and another 6 or 7 is actually things you should start cutting from your inventory, right? From your fulfillment center, and actually lower the cost of doing business just by knowing these facts. And that's what we found have been really impactful for some of the business clients that we've been helping. It's just helping them learn what the winners and losers in their business by doing clean bookkeeping. This way they focus on their winners, right? Drives their profit even harder and start dropping the things that are actually lowering the profit margin. We're finding that helps a lot. And the second thing that really helps a lot is just understanding what tax deduction actually affects them, right? Tax deduction is one of what we call a second revenue model for them, right? The first is whatever product they're selling, and second is what tax dollars they actually don't have to pay to the government. Let me tell you, Yvonne, the IRS, or Uncle Sam, we like to call him, loves taking your money. The US government is in $1 trillion of debt. If you tell them, hey, I'll give you an extra $10,000 in my tax bill this year, they will not hesitate to take that, right? But if you're not knowingly doing that, you're just losing some of the hard-earned money. I see entrepreneurs who stay up to 2, 3 a.m. every night killing it because they want to make sure their business grow. And you're doing all that and still giving away part of your profit, not worth it, right? So that's what we try to protect for them. We try to protect, making sure that whatever case possible, we stay in, of course, all the legal way of doing it and try to minimize their tax bill to make sure they get back every penny they deserve. for their hard work.
Sounds amazing. So it sounds to me like you're kind of mixing, you also put into your service some sort of a CFO service, like checking out the products that are selling, like your best sellers and the losers. So this is something that I wouldn't expect in the scope of the accounting service. So this sounds amazing. And I wanted to ask you I saw that you have a free ebook that elaborates about the most crucial ECOM tax deduction the IRS doesn't want us to know. So can you elaborate about a few examples?
Yeah. So the reason we made this ebook and why we're just giving it for free is we really believe that, the tax education in the space is just so bare minimum. Right. Mm-hmm. There's a lot of, when we look into forums, when we used to do drop shipping, we see people like post all kinds of these myths, right? It's like, oh, I think I can do this. I think I can get away with this. Do you think I have to pay now? Right. And all these like confusion, because then people comment when they don't really understand it themselves. And then it adds even more confusion to it. Right. And the reason why we want to create this ebook is to say, hey, even if you're starting out, we want you to know the most crucial things that you should really be watching out for your business. Mm-hmm. And just to name a few, give away a few secrets right on this podcast of what we include in this ebook is one of the things that we really want business to know is that, in this new modern way of doing business where, after the COVID and pandemic has hit, a lot of business has shifted away from having an actual office into your home being your office, right? Being the place of doing your business. And the government has actually created a deduction that really rewards on that. It's called the home office deduction. And there's two ways of taking it. One is just like a very simple way of doing deduction where you get like $5 per square foot and you're allowed to take 300 square foot of that. So at the most, if you do the math, it's $1,500 in deduction. But that's not the way you should be doing it. The way you should be looking at it is what they call the actual deduction method. And the actual deduction method would say it takes your actual square footage of your home. Let's do a simple math, right? Say it's 1,000 square foot. And how much of that home you use for your business, as your home office. Say that's 300 square foot of it, right? So that means for everything that you pay from mortgage, utilities such as gas, electric, water, any kind of repair and maintenance you do in your home, anything like that, right? You can take 30% of that as a home office deduction. So if you do the math, some of our clients have been able to get around $20,000 to $30,000 in a tax deduction just for using their home exclusively for the use of their business. So that's one of the biggest deductions we don't want people to miss out on, or just simply take the easy way out and just get the $1,500, right? Think about it. Do you want a $25,000 deduction or just a $1,500 deduction, right? And the math there is crazy, right? When you actually know that there's another way of calculating and doing that math. Another thing we really want business owners to know about is what they call the startup cost credit that the US government give out. The startup cost just rewards you for taking the risk of starting a business, right? The startup cost basically says, even before you start your business, before you even think about, registering an LLC or anything like that in your business, if you start doing like any kind of product research, right? If you did any travel, if you talk to any lawyers before you even start your business, all those costs is what they call startup costs, right? Before you even start your selling anything. And you're allowed to take your first year, $5,000 as a startup cost deduction. Just for thinking about starting your business. So that first year, during your first year, I'm sure Ron, most businesses, they'll start off slow, right? They're just trying to learn the business, so they're probably not making a lot of money yet. So this is very big, right? To get $5,000 of a tax deduction to make sure that you don't have to pay any or at all taxes that first year. So that's another thing we wanted to know about. And the third thing we really want business owners to know about is that when you guys start out, you're usually what they call a cash basis taxpayer. And cash basis is very, 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 very flexible. That means you can do little tricks as far as accelerating your expenses and really deferring your revenue. What I mean by that is by accelerating is when you're in a cash basis, it's all about when cash goes out, right? So if you can make cash go out before the end of the year, that's going to count as a deduction for you for your expenses a lot of the time. So we tell a lot of business owners that to do is if you can buy a little bit extra inventory this year, if you're going to be selling that inventory next year, you're going to be selling out, you have a good forecast of how your sales is next year, you should do that. You should buy a little bit extra inventory at year end, store it at a fulfillment center. And then what that way is you can get a little bit of extra tax deduction at the end of the year and sneak that in to make sure you lower your tax bill for that tax year, and make sure you don't have to pay such as big of a tax bill. And when other cases you might not know this trick and just buy your inventory at the normal cadence, right? The next year.
Yeah.
Yeah. So there's little things like that really adds up, Ron. And that's really what the ebook introduced to a lot of clients out there. And they really comment, right? They read the ebook saying, man, I didn't know about any of this stuff. Right. And they're leaving so much money on the table at the end of the day when they're paying their taxes, not knowing about these deductions.
Amazing. And yeah, it makes sense. Nobody teaches us this because nobody has the IRS has any interest in teaching the people about this. And I want to emphasize that I assume that other countries, let's say if you're not from the US, if you're from the UK or Israel in my case, so they might be parallel laws and rules with regards to the specific state. So you need to check, but obviously you give examples based on the US IRS, but I'm sure that something similar exists in every other Western country.
Yeah, 100%. Everyone makes their tax code so complicated. Every government. It's literally like this thick and it's fine print. Like they do like 4-inch font. So they're not even encouraging you to read it, right? At the end of the day.
And this is why it's also very important, as you mentioned, to find someone that gives accounting services in your specific niche.
Absolutely.
For me, in the past, I had accountants that had no idea about e-commerce, and it really, like, as you said, we had communication issues. And when I wanted to use like the PayPal conversion rate fees as a deduction, they didn't realize what I was talking about. So having someone that has a specific knowledge makes a lot of sense, and it's very important in this case.
Very crucial, very, very crucial. And I'm not gonna front. I don't know the entire tax code, right? It's literally this thick and it's 1,000 pages and all nuances. You will need someone who's rich, like like an Amazon or Facebook or those people who can hire like hundreds of lawyers, hundreds of accountants, and they that's the thing, right? They all get these big news saying they always pay like $0 in tax liability, and the reason is they have these like this army of team doing that, right? And for us, we're like we can't do that, but we're going to focus on just the tax laws that's going to help our client the most, right? So we read those sections that says, these are the things that can help e-commerce owners the most. And we really drill down and just say, we're going to specialize in here. And that's what we're good at.
Amazing. Let's talk about another way to increase your profits, which is cashback rewards, which you said that a lot of clients come to you without even realizing what are like the potential of good credit cards and cashback rewards. So can you elaborate about like some of your best practices or examples of great cashback programs?
Yeah, for sure. So a lot of time we really get this from our international client base, right? Our international client says, hey, I actually sell, 60-70% of my concentration of customers is on, Shopify, and they're US based, right? And like, what can I do? And the recommendation for us is always, you should try to see if you can set up a US LLC, which we've gone to much easier process these days, right? And from that point, you want to establish what they call credit, right? Which start off by getting your US bank account, having good cash flow floating in there, and eventually building up enough credit trust to open up your first US credit card, right? And from there, once you have a credit card and you're paying it off on a monthly basis and you build that trust, you can get what they call the gold mine of business credit cards. And there's two that I really want to point out on this call for those that are interested in this. One is the Chase Business Inc. card, and the other is the Amex Gold card. And the reason those two are very important is because one of the most important categories to e-commerce owners is ad spend, right? Ad spend is one of the biggest costs in e-commerce, right? And those two cards both heavily reward ad spend. I believe the Chase gives 3 times point for ad spend. So if you think of a typical business that's in the 7-figure range, they probably spend at least $50K on ad spend a month. So that's $50,000 in ad spend times 3, 150,000 points they're getting per month.
Wow.
Right. So in a year, that's a million plus points that they probably can get to use to spend on, first class flights, hotels. And I'm sure you've seen all these Instagram influencers and all these types, right? That always like flaunt about this amazing vacation they get to go on, right? And all these countries like Fiji or Thailand, right? Or anything like that, right? And they can stay at these fancy hotels. And they're just using credit card points to fund all these travels, right? And you can do that too as a business owner. So you're really missing out. I had a kind of a funny story, but kind of a nightmare stories for his client is that they came in, we did a diagnostic for them. And at the end of the day, I was like really curious because I was like, you didn't tell me, obviously I'll call this guy client A, right? You didn't tell me about, you didn't report any credit card you're using. I'm like, why? I was like, oh, I don't have any credit cards. Like, how are you funding your ads? It was like, oh, I just use my debit card. It was like, you're spending like $60,000 on ads every month. You're doing your debit cards. And this guy was a US citizen, right? I was like, why are you doing that? Like, I did some simple math. I was like, this is how many points you're giving up for doing that. And he was horrified, right? And of course, at that point, he quickly will go and apply for credit cards. As a US citizen, it's much easier for him, right, than someone who's foreign to apply for credit cards. And, he was very thankful that he got on board at that point. But I was like, wow, the amount of points he was giving up beforehand, because he was in this business for 5 years at that point. I was like, geez, can't even imagine, But I'm glad someone was able to tell him about it. And he now, I'm sure, has millions of points at his disposal that he can always go on a vacation with his family and stuff. So,
quick favor, guys. If you enjoy these shows and have been a listener for quite some time now, we would really, really appreciate it if you could take the time to give us a review on iTunes, Stitcher, or whatever your preferred podcast app may be. Having lots of ratings and audience feedback makes our show become more visible across multiple platforms. And it also supports our mission of helping as many people as possible to become better marketers and better entrepreneurs. So if you're not driving and it wouldn't be dangerous, pause this thing right now and give us an honest review over your podcast app. And we will love you even more than we already do. Thank you for taking the time, and I hope you enjoyed the show. I remember the day that I realized that I didn't use a cashback. In Israel, it's not so common. You don't get like a great returns, but still, when I realized that I wasn't using this and I became aware of this option, it was a kind of a shitty day.
It was eye-opening, right? It was like, wow, I'm just giving up this money I could just be earning.
Exactly, and it's like it can be like sometimes it's like 1% of the revenue of the ad spend, which is a lot. It's a lot of money, basically.
Yeah, and I want to add a little loophole here for the listeners out there. Right now, currently, right, with the legislation as written right now, all this, I would say, cash back you're receiving, or all these things that you can transfer the points all to different rewards, it's not being taxed, right? So if you use the points to buy a flight, if you use the points to buy a hotel, that technically should look like income to you, right? Or it comes toward revenue, not being taxed right now. So it's like a tax-free way that you're making revenue, like you've been saying, Ron. So it could be like 3 to 5% more that you're earning just in points. Like you can literally break even in your business, right? Like you break even on ads, right? And you're just making money off the credit card points. And some businesses flow like that.
I wanted to ask you a non-related question with regards to cash flow management, because this is an issue that I know a lot of e-commerce owners have problems with, and also I have these problems, obviously. So how do you approach cash flow management? Are there any like different methods to handle cash flow? What is the most accurate method to use in an e-commerce business? Obviously, it depends on the business, a lot of stuff, but a general overview of handling cash flow.
Definitely. So the biggest problem we see in cash flow management for e-commerce is how much money they don't realize is tied up. And let me explain. When I say money is tied up, is really in one area that's most important. So if you're like a branded business and you're importing inventory, right? Like I did that a little bit at the later end of my e-commerce journey, which is I decided to go on Alibaba, right? Find a supplier and be like, hey, I want to cut down on my cost of goods sold, right? So I'm going to start importing 50 units, 5,000 units of this product, right? And I was like, okay, this sounds great. But guess what? It takes forever. They ship it. If you want a cheap shipping method, it's over cargo, right? On a boat. Yeah. And the boat, I think, took 11 weeks to arrive.
Wow.
So your money, right? However money it costs to buy that 5,000 unit is tied up into that inventory, right? So say I spend $5,000 on that inventory. That means it's slowly flowing on a boat across the Atlantic Ocean right now. And that's money you can't use to fund other part of your business, right? That's money you can't take out for your personal use. That's money you can't put further into ad spends because it's tied up. And the things we try to help our client understand is, because you have money that can be tied up in this way, you need to do what they call forecasting. Right? Forecasting is basically using your historical data points of how you've been using your money, how you've been allocating your cash, to kind of look ahead and say, in the next 6 to 12 months, how much available cash, free cash flow you have available to you. And that's a very important metric because free cash flow is basically a way for you to know that this is the cash I have to use in other ways, right? It's the cash I can either use to diversified, meaning that I can use to invest in, say, stocks or bonds, cryptocurrency, real estate, or or money I can use to for my own business, for an other business I want to invest in, or money I can just take out for my own family use and other things, right? But while understanding that number, it's very, very scary to operate your business because you never know when you're going to run out of money. You never know when you're going to look in your bank account one day and be like, I can't fund the next inventory run, or I can't afford to pay off my credit card bill. I can't fund more ad spend, or I can't pay my VAs or anything like that, right? So it's really important, and that's what we do with our clients. We give them a cash forecast and say, this is the amount of cash you have. This is your burn rate, right? Which is how much cash you need to keep your business running, right? Because we look at 12-month trending, we look at your average of how much money you can keep running. And then we look at worst case scenarios, right? We look at things, say, what if your business dropped 20%? What if your business dropped 30%? Are you still okay? While knowing all those things, you don't know where you stand on a cash level, right? And that's why it's so important to forecast cash, knowing ahead what you're going to spend on, knowing how long your cash can be tied up, right? And on a ship slowly coming over. And then knowing, even when you receive that inventory, how fast can you turn it over, right? Inventory turnover is a huge metric, right? And that you get that 5,000 units, but how fast did it take you to sell it off, right? If you don't sell it, you can't get it converted back to cash, right? If you're just sitting dead in a fulfillment center somewhere, that's just stuck until you can liquidate that cash. You don't know when it's going to come back to you, right? And those things, I feel like a lot of business owners, as they scale, don't keep in mind. And I feel like that's why a lot of time they become stagnant. They get stuck at a certain range of amount, and they say, why can't I get to the next level? Right? Because they don't have one of the main reasons they don't have enough cash capital to fund them to the next level, or they're too afraid to do that because they don't know where they stand, right? They just stare at their bank account. There's a huge amount, and like when we see a bank account, we just see a huge amount inflow, huge amount outflow, and then you see a small little balance left. They're like, of course you're scared. Of course you don't know how to move to the next step, right? While someone giving you some recommendations and really digging into the numbers and cleaning it up, giving you something readable, presentable, right, to yourself and to investors in the future.
I think it's very important because on the other hand, what I had is because of cash flow issues, I took too big of a buffer and I kept too much money in my company instead of allocating it and diversifying to stocks, bonds, crypto, or just pulling it as a salary. So you can also be too cautious if you don't do like correct forecasting. So you can also take too big of a buffer. So
Definitely,
this is why it's very important.
Yeah, it's good. Then you're missing out on the growth you can with your money, right? Because the money just sitting in a checking account is not growing, right? But if you have a way to know that this is money that you don't need to keep your business running, you can do so many other things with it right now at this point in time, right? There's so many other opportunities you can be looking into.
Do you have any sort of like a rule of thumb of distribution of how you would suggest to people to handle this? So let's say you suggest every month, there is like the profit first method that you take at least 10% and put it in your own personal bank, and then you invest like 15% into growing and 50% other percent into maintenance. I'm just throwing out numbers, but do you have any like rules of thumb that anybody can sort of use?
Yeah, definitely. I mean, I wouldn't say there's a rule of thumb just because, businesses just vary one from the other, right? If you're in the fashion niche, if you're in nutrition, if you're running more of a subscription business, there's just different flows of money that's coming in your business, and you really got to dig deep into it. So if I just throw out a number, everyone's going to on the podcast be like, yeah, I'm just going to do this, right? I don't want them to do that, right? I do want to say at a bare minimum, you do want to keep around like a 15-20%, I would say, buffer for tax reasons, right? You never want to empty the coffer at the end of the year because you think that all this money is available for you to use. But if you haven't taken care of your cash bills, if you haven't done, say, quarterly payments, right, quarterly estimate payments to the government, that's something you're going to be responsible for. And you don't want to be in a situation where you're meeting with your accountant at the end of the year and they say, okay, you owe this much in tax. You're like, oh, I didn't know I just keep money aside for taxes. What do I do now? You never want to be in that kind of situation. So I would say a good 15-20% just for tax is probably good for anyone listening, right? Any business owner that's listening on the call.
is it mandatory in the US to pay upfront or not? Because in Israel, you need to pay upfront like every two months.
Yeah. So in the US, when you're a solo entrepreneur, when you're just running your own business, it is recommended that you make what they call quarterly payments. So every 3 months, right? Every 3 months, they expect you to kind of predict what you think your tax bill is going to be this year and make a payment on those cadences. And if you don't do that, what they can do is they can penalize you a little bit at the end of the year, right? Say, hey, you should have done your quarterly payments. You didn't. Here's the extra little tax bill, right? To do that, penalizing you. So to not get that little extra fee or penalties, we recommend you do the quarterly tax payments.
Okay, we covered a lot so far. We covered different scopes in the journey of the entrepreneur, of the e-commerce entrepreneur, just starting out, cleaning up the bookkeeping, making forecasts. And now a topic that I would also like to discuss with you about is how do you prepare your business for an exit, for sale?
That's a great question, Ron. So when you are at the stage of your business where you're big enough and you want to sell, right? You're like, hey, I worked so hard in this business. I want to get a 3 to 5x multiple, right? Which is where we see very common e-commerce these days. And how do I do that, right? That's the first question. The first thing we would say the business owner need to make sure they do is they need to prepare good, clean bookkeeping, right? Financials, what they call it. And financials usually consists of three types of documents. One is a balance sheet, one is an income statement, and one is a statement of cash flow. And the reason why you want to prepare these three is most investors or most, I would say, bank representative is going to expect that your business have at least these three, right? Because what they do is when they come in to have and they potentially want to buy your business, they go do what they call the due diligence process, right? They want to see that, hey, you're telling me you're making this much money. Can I trust you? Can I trust your numbers, right? And they're going to dig deep into it. They're going to ask you for bank statements. They're going to ask you for tax returns. They're going to ask you for these financial statements. They're going to ask you for metrics, right? They're going to want to know that you can prove out your business. And before you even present to them, you really want some experts to tell you, say, hey, can you do an internal evaluation for me first to say, how are my metrics right now? How am I net profit right now? Am I trending in the right direction? Am I always making more and more money, right? Like what's slowing down my growth? What would this outside investors see, right? What will make him give me a lower valuation for my business, right? And so you do that because you want to make sure that you're selling at the right time, right? You're selling at the time where you're at your height of your business, right? The last 12 months is your best 12 month ever because that's what's going to guarantee you for the highest payday, right? If you don't do that, if you're just like, I think this is a good time to sell and you're not exactly sure, you're going to set yourself up for failure where you're like, I wish I waited a little bit longer. Maybe I waited until this holiday season's over, right? This big Q4 is over and I can include that into my last 12 months so they can see that I had an explosion at the end of the year of my revenue, right? So these are little things you want to look at, and you want to look at kind of like the market conditions, right? Is this a good time to sell my business, right? Is this should I be selling my business, and do I want to keep part of my business, right? Sometimes what business owners do is they do these kind of earn-out agreements, right? Where they're saying like, I'm selling my interest in my business, but I want to remain as the kind of like the controller or the manager of my business. And if I can help this business keep growing, right, and to a certain revenue level, I still get what they call earn-outs, right? They say that you still get money in your business. So there's a lot of different kind of agreements you can see, but some business owners are like, I don't want anything to do with the business. I want to sell it 100% clean. Just give me my, $5 million payday because that's my dream number in my head. And I can go retire, right, in Cabos or go retire on an island somewhere, right? It's really about the mindset you have for how you want to sell. But I think the most important tip is before you go and look into outside brokers, right? Always make sure you understand your numbers first. Understand that you have what we call investor level financials, something that where you can comfortably present to any kind of investors and let them know that, hey, I think this guy is so organized and has all his numbers together. I think I want to buy this guy's business because it's clean. I don't have to investigate too much, right? You want them to be thinking that and not that. He has things everywhere. He doesn't know he doesn't know his ad cost. He doesn't know really what his total sales for this month is. If you're disorganized, they're going to give you a very low valuation at the end of the day.
normally when someone is about to sell the business, how much effort and time does it take to prepare everything with regards to cleaning up the bookkeeping and afterwards presenting it, and then going back and forth with the investor or the buyer? How does this process look like normally, like the back and forth with the buyer?
Yeah, normally it really depends on how organized you are in the beginning. Like we had owners come to us who hasn't done bookkeeping for the last like 18 months, right?
Wow.
So the first thing they asked us to do is, can you do a historical cleanup project for us? Just go back 18 months, scrub all the numbers, make sure you can review my previous tax return to see if I missed anything. And then we bring them up to date first, right? That's the first step we do for them, right? But then there's people who come to us saying, oh yeah, we've done all that, and I just need you to transform my numbers into something that investors want to see. And then do that kind of audit for us, and then making sure that is this a good point to sell before I go to the brokers, right? So it really depends on what stage it is to kind of find out, it is a good time to present to any outside source, I would say.
And I know you guys, it's a bit non-related, but I know you guys also launched a course that is called like tax-free ECOM. So can you elaborate a bit about the course?
Yeah, definitely. So the course is called Tax-Free ECOM, Hyperdrive Your After-Tax Profit. And it's really a response to, we get a lot of DMs, right? Because we put content out there, right? Or blogs and things like that. And then we get feedback saying, hey, what is this? And we get a lot of questions from people who are just starting out, right? Because e-commerce is such a big industry now. There's so many players, so many people are trying to get into it. And even these guys just starting out have a lot of tax questions, right? Because it makes them hesitant to really launch their business or grow it, because they have these questions of like what their tax implication is. So this course is really a response to that. Me and my partner Stanford, we spent 3 months time recording all these, lectures and these different webinars. For these people who I would say make between $0 to anywhere from $300,000 a year, and it really teaches them basics, right? IRS terms, different kind of business entities that they can be involved with, tax deduction they should be watching out for from the very beginning, and then when they make it big, how to find financial independence for themselves, right? How to sell off their business. What are the tax things they should watch out for? What are the sales tax things? It's a big topic right now that they need to look out for, and really brings them up to date so that when they are ready to scale their business from 5 figures, 6 figures, 7 figures, they're so much more prepared, right? They're not just going to any accountant who doesn't understand the business and, they're just filing some return for them and thinking that they should be paying the bill and they're just paying it, right? They understand the important questions to ask, right? When they're going to any kind of professional looking for help. And they're just, I would say the students that have taken the course are just so much more well-rounded. And they tell us, man, why didn't they teach any of this in school? They feel like they just missed out on this part of education. And they're like, yeah, this is so much better. And also we understand like completely, bookkeeping, tax are not the most sexy terms. They're not the most exciting topics in people's head, but we try to emphasize that, what is sexy is making money. What is sexy is keeping more money in your bank account, right? What is sexy is after tax profit, right? So we try to emphasize that this is why you should be motivated to teach yourself these topics. And we hope that by going through this course a little bit, you kind of in the back of your head are always aware of how you should be structuring your business, how you should be thinking about your business, and not be afraid to take it to the next level, because you're like, okay, I know what I need to have in place. I know what paperwork I need to have in place, what compliance thing I need to worry about when I get to this next level. And you don't have to, go out to the forums or Google as many things, because you have this course, helping you every step of the way as you're growing.
And this is a few very important points. So first of all, understanding taxes it's very important, because once you're not on your numbers, you can screw up big time. And for me, like 3 years ago, or 4 years ago, I lost a lot of money just due to lack of reporting and incorrect reporting. I was sure that I was making money, but I didn't include like the fees, stuff like that, and my bookkeeping wasn't so clean, and I assumed it was like tax issues and cash flow issues. But then when I did like a real drill down, I realized that I lost like $15,000 just because I thought that I was like 5% profitable, but at the end of the day I was losing money. So being on top of your numbers is very important. And the other thing which you talked about is the fact that a lot of time entrepreneurs, they don't do another move towards growth because they are afraid from like the headaches involved. what type of stuff they need to
Absolutely.
do on accounting end. So this course sounds like a great tool and very impactful. Where can people reach out to you guys and hear more about you?
Yeah, definitely. If anyone is interested in, just getting a little bit more guidance on any accounting tax topics they may be faced with, feel free to check out our website at freecashflow.io. And if you're ready to kind of book a call, basically what we do is kind of like a 30-minute discovery call, learn about your business. And then if you're interested in taking it further, we sign NDA and we just do a diagnostic video for your business, all free of charge. And if you're interested in that, you can just go to freecashflow.io/book, and you can just book a call on with us, and we're happy to take a look and see if we can help your business grow even further.
Awesome, great. Sounds great, Alan. Thank you so much for providing all this value, important value.
Absolutely, yeah.
Obviously, we'll share the links in the show notes. Thanks again.
Yeah, thank you so much, Ron, and thank you for the opportunity to be on this podcast. I really enjoyed it.
Bye-bye. Take care. Hi guys, this is Yaron again. Just a few more things before you take off. Number 1, if you want to learn more about e-commerce and marketing, make sure you check out our YouTube channel, which is called EcomXFactor Official. Number 2, check out our Facebook group, which is called EcomXFactor Marketing and E-commerce Mastermind. This is a great place to ask questions and connect with other business owners. And last but not least, if you enjoyed this episode, please make sure to share it with your friends and colleagues, plus leave a review at your favorite podcast app.